If you've been holding off on making a decision to buy or sell a home in Ocean City, New Jersey, this video is for you because in today's video, I'm going to take you through everything that happened in the month of October. And the big change is what just happened this week in November. The election is done and decided and behind us, and the Federal Reserve came out with yet another rate cut. So let's dive into what happened, what all of this means that has already taken place in November so that we can figure out what's coming next. I sometimes skip this part, and I assume that you guys have been watching and with me for a little bit. But in case this is your first market update video, how we do this, we start with what has happened in the past. We talk a little bit about what's going on in the present. Again, October, some patterns that I've identified. And then we project going forward because that is obviously, number one, impossible to do. But it is not impossible to look at those trends and patterns, both recent and historic, to help figure out what's coming next so that if we can get an edge, that is the make or break point for you as a buyer or seller. That is where you are able to make your money. So to start things off, mortgage rates are up to 7%, just above or below, depending on the product. It's a full percentage point increase from where we were a month ago, which is crazy. And obviously, the confusing part for a lot of people is they look at the Federal Reserve having cut their rate, right? Interest rates, we'll use the broad term, by 0.5% and now another 0.25% just a couple days, just yesterday, actually. They would assume that that is going to make mortgage rates change downward, but actually it has caused them to go upwards. It's complicated, but the short version is investors have not been convinced, right? That the reasons that the Federal Reserve is using to justify those rate cuts, that they're real and that they're longstanding. So that really is a surprise a little bit. But at the end of the day, I do think that we're going to stay around this point for quite some time. The Federal Reserve is talking about more cuts coming up in 2025. Inflation now being down around 2%, about where they want it to be, is great. Deflation seemingly unlikely, so prices are likely to stay where they are across the board, not just with housing. So mortgage rates going up has scared some people off. You may be one of them. Inventory wise, we're up just 2% from the start of the month. And going back over the last 4 years, inventory has peaked between mid-October and mid-December, right? Here we are in November, so it's possible that we go back above that. It's possible that we've seen the peak already. TBD, we'll have to look backwards in a month or two and see really where it hit and where it happened. But the short version is I don't anticipate a lot coming out. I don't anticipate inventory growing in any meaningful way. Seasonally here in Ocean City, again, we're a summer town, but we have two main times of year where inventory spikes, and the fall is one of them, right? And I think, again, we've seen that or are close to it. The other time being in the spring when we see a lot of inventory coming up. But usually we're heading into the sleepy season, right? For the next 2.5 months, generally pretty quiet. Days on market still extraordinarily stable, sitting around 50 days before, on average, a home will sell. But again, there's two different polls here. The one poll being newer homes or newer homes that are listed, that are priced appropriately, priced well, will go within the first week or two still. It still happens. Homes that are priced higher than they should be, or the market dislikes them for one reason or another at those prices, even if they were justified with comps, they'll sit and they'll sit and they'll sit and they'll sit. That'll take a while. So that's how we get to that 50-day average. Prices are still very stable, 4% year over year growth in prices for condos, and single family homes, again, 14%, which is pretty substantial. Now, looking back at this chart, and it's interesting now looking where we were last year versus this year in October, right? We actually have a lower interest rate than we did same time last year. Inventory just 3% higher this year than where we were last year. And these sale to list price ratios are generally pretty close to where they are. Nothing to write home about that would identify that the market has changed or is changing in any particularly meaningful or material way. And obviously, compared to last month, it's a pretty similar story, except rates are higher, right? So looking at this chart, it almost looks like last month the rates were very attractive. But a lot of people still have that 2, 3, 4% stuck in their heads from the last couple of years. And whether that's because that's what they have actively on their home, primary or second home here in Ocean City, or it's just, it was drilled into you for years, that that's what could have happened. It's a powerful anchor point for people. Now, new listings, pretty consistent for the last 2 months, almost the same number of listings, and pretty similar to where we were in the same 2 months last year. A little bit lower, but nothing crazy. We're on pace to see about 5% fewer new listings this year compared to last year. Last year was about 10% less than the year before, and more so beyond that. So fewer people are listing their homes to sell. Period. End of story. And that is the leading driver for everything else, right? The number of homes that go under contract. I've been saying this for years now, right? If we are to start talking about, oh, wow, we haven't seen many homes going under contract, right? Those are way down. The driver is if people aren't listing their homes to sell, people can't buy in the same amount as they would have if there were more homes for sale. So all of that, again, we'll get to at the end in a little more detail, but nothing too surprising here. Pending sales, pretty comparable to where we were last year, a little bit fewer than were expected, both compared to last year and taking into account what we saw in September last year and this year, it's a little bit fewer, just a few homes. But generally speaking, again, the pattern continues that 2023 is still pretty good blueprint for what we've seen so far this year. Closed sales, we had our strongest month all year with the amount of homes that actually closed and sold. I again don't read too much into this. This is a lagging indicator of when people were getting their homes under contract. It could have been a year ago if it was new construction, but still good to see a nice strong month with a lot of people getting into their homes here. Months of inventory for single family still bouncing around between 7 and 8 months of inventory, which arguably should lean towards a buyer's market. And I think you can get some decent deals on some of the single family homes that are out there, whether the new construction or existing. But if we were to look at that breakdown between, hey, how many are under a million, how many are between 1 and 1.5, how many over 2 million, the majority of these are still going to be over $2 million. Most of them being new construction in the gardens, on the beach, on the bay. That's just the nature of the beast now here in Ocean City. Single family homes that are reasonably priced are not exactly easy to come by. That's why a lot of those end up going somewhat quickly. So it's not an easy world if you're out there looking for a single family home, let alone one that's under $1 million. It's definitely tough. Now, the median sale price, again, we're starting to trickle back down, as I mentioned. We really, I'm not going to say shouldn't have seen the spike that we saw 2 months ago. It happens, right? We have outlier months. That's why I look at 12 months on average, and it's a rolling average that I do here. But we're trending back towards where I think we belong, closer to the $1.6 million on average mark, but still extremely strong price movement here. And if you're going to look at this again, if the first time seeing this chart, you may look at what that dip was at the end of 2023 and go, oh man, I really missed my opportunity then. That was really dragged down by one. I'm not going to call it a bad month. It was just a month where we actually surprisingly had quite a few homes, more homes for sale and closing under $1 million. Some of them were teardowns, some were not. But that anchor point really dragged us down a little bit for quite some time. But single family market in a nutshell is still very, very strong right now. Days on market reflects that, right? We've been sitting between 55 and 60 for the most part for almost 2 years running. So that's about where we are. And I think that's where we stay. Now, moving on to the condos and the townhome sector, still again between 4 and 5, bouncing around months of inventory, a stronger market here than we see with single family homes. We have more inventory here than we have with single family homes. It's a different market, so I break them out this way. But prices are very stable, extremely stable. And I don't project them to change massively one way or the other. Again, there are still some that are selling for prices that I can't believe in terms of higher than I think they should have been. But there's still some deals that are being had too. So this is the time of year to really, really dig in and to get an understanding of what you're looking for. And if we're going to be able to secure you a good deal, it's going to happen, generally speaking, over the next 2 months or so before most people start to wake up. Not to mention, depending on what your goals are, right? If you have to sell a home here in Ocean City or elsewhere in order to buy this and do what we call a home sale contingency to protect yourself in the contract, over the next 2 months, you have a high likelihood of getting your offer accepted with the home sale contingency. Whereas if we wait until the spring, where there's more competition, more offers being submitted, odds are you may not be able to get that. So that is where we are there. Now, speed, this is a self-created, right, ratio and statistic that I came up with to measure the number of new listings compared to the number of homes that went under contract that basically lets me see how many new listings do we have to see to get one home under contract. Generally, we're under 2. We're generally around 1.75 on average over the last year or so. So here we are a little bit above 2. That's not the end of the world. It's pretty consistent with what we should expect in an October compared to last October. It's a little bit higher compared to the one before. That's a little bit lower. So nothing to write home about here. And again, here you can see things averaging back out, leveling out after we did see a pretty big increase, some slow months in 2022 as interest rates really ramped back up for the first time. That was eye-opening. What this shows me is people have adjusted, right? They've accepted that this is the normal that we have likely going forward, barring some crazy change. I don't expect a whole lot to shift massively upward or downward in terms of prices. So what do we see going forward based off of trends that I've seen, interactions with buyers and sellers that I have on a routine basis? So mortgage rates, it's going to be interesting to see. I was completely wrong. I thought that we were going to see rates stay under 6.5%, based on the upcoming rate cuts, and that obviously did not happen. So I think we take it day by day at this point. Obviously, with the election, that's the biggest thing to see how things play out, as news is released and promises are made. How do investors react? How do different markets react? And what does that mean for us? So I'm going to be staying on top of all that and bringing you the news as it is appropriate to do so. So if you haven't already, definitely make sure you hit subscribe down below and turn on the notifications so you can stay in the loop. Inventory wise, it's normal to see things spike and to increase from September into October and sometimes even into November. Nothing really to be surprised by there. But as I mentioned earlier, we've seen 7% fewer than expected new listings. And what I mean by that is compared to last year, we've had 7% fewer new listings over the first 10 months of the year. And that has resulted in 5% fewer homes going under contract. So they are correlated. It's not a one-for-one correlation, but it is definitely in the same direction. So really, it's been the same as we should have expected in terms of speed, right? In terms of total homes going under contract compared to how many we've actually had the ability to get under contract, the listings versus the pending. So again, that speed metric really tells a good story here. Now, again, deal season's upon us, and it has been for the better part of a month now. And I have seen some good deals happening. I've seen some bad deals happening too, as always happens, but there are a few that I have my eye on that I think are a very, very good deal. So if, again, I can't speak about them openly here, but I can talk to you about them one-on-one. So if you're curious, if you're active, if you're looking for something and trying to make the best decision possible, find the best value out there, just reach out to me. I'm happy to talk through them with you. And I will, again, continue to take some of those and put them into the best buys videos. However, the promise I make to all my clients is if we're working on a deal or even talking about one property, even if we're not under contract, that stays out of the best buys piece. So last but not least, prices. Again, we're not going to hit 300 active listings by the end of the year. That's the only way that I would see or expect some price changes to happen, and it's just not going to happen. So prices are where they are. They're not really going down. And what's a little bit funny is right after the election, over the past, I'll say 36 hours, I have seen some new construction homes actually taking their listings down and increasing their price. So they went to hesitant, potentially willing to give a deal on some of these homes to now feeling more emboldened by the direction that the market is going to go. And some of these builders, these investors have a lot of money out there. So they're putting their money where their mouth is. And they believe that based on the results of the election, that things are only going to improve from an economic standpoint, which means prices are going to continue to rise versus, oh gosh, things may come down a little bit, so we're going to cut until we get this thing sold. So it's some of the first signs that I've seen of people reacting to the election. So with that said, I hope you found this helpful. If you have any questions whatsoever, you can reach out to me any of the ways you see down over here. Always happy to help. And if I am unavailable, again, I have a great team with me here. They're all willing to step up if I am, for example, on vacation, heading to Mexico for a wedding in about a week. So I will be out of touch for a bit. But between now and then, if you need me, I am here. Thank you, as always, for hanging out. I'll see you next time.